Welcome to this week's market drama. We'll begin with the S&P 500, which was down 1.9% for the week. It is still up 16% year to date, though. When you look at NASDAQ, it was down even more, down 1.9% for the week. It is still up 31% year to date. The big story, though, was oil, which was up 2% for the week. It is now up 8.7% year to date. It eclipsed $87 per barrel. The price has been going up now for the better part of 2 weeks as there's been renewed oil supply concerns. Obviously, oil going up adds inflationary pressures for energy prices down the line, right? So that's the big concern here. Why? Because the market has been rallying this year in the back of one, a growing economy that supports profits in the coming quarters for corporations, and two, that inflation's coming down, and therefore it might mean the end of the Fed's rate hiking cycle, right? That's kind of been the story. So if oil prices start to go up a fair bit, it kind of models the second end to the Fed's rate hiking cycle, as well as if oil prices go up a lot, that could affect economic growth as well, right? As people have to pay a lot more at the pump for gasoline. So that's on the market side. There is on the stock side. On the bond side, it is worth noting that when you look at the yield curve, right, the 10-year yield minus the 2-year yield, you are seeing the yield curve steepened, right, from very low levels, which historically below zero, basically negative yield curve, is signaling that you could see a bear market, right, for stocks. So the fact that the yield curve is coming back from very negative levels to closer to flat is a positive. We need to continue to see this playing out, and is very much tied to what we were saying, right? If you expect the economy to continue to do well and inflation to come down, you should over time see a positive yield curve. So that's something to keep an eye on in the coming weeks. When it comes to economic data next week, this past week was pretty slow considering the short week. But next week we have August CPI as well as producer price index, right? So those two are good indicators for inflation. And then we also have August retail sales. Consumption accounts for 68, 69% of GDP. So retail sales give us a very good indication if the consumer's wallet is holding up steady. That's it for this week. Stay tuned for next week.